Hey investors, today we're going to analyze the Greenville, South Carolina real estate market. We're going to first take a look at the overall market of Greenville, and then we're going to take a deep dive into an actively listed property in Greenville to determine things like cash flow, return on investment, cash on cash returns. In essence, we want to see if we purchased an investment property in the Greenville market today, if it's going to make financial sense. If this is your first time watching a video of ours, I'm Dave Hathaway. On this channel, we discuss real estate, we discuss investing, and we discuss building wealth. This video is part of our Deal Day series where each week we look at a new property in a new market to determine if it makes financial sense, if it's going to make money, and if it can build investors generational wealth. And again, today we're going to deep dive into the Greenville, South Carolina market. We're going to look at the property 1503 Wynwood Court, Greenville, South Carolina, 29607. So first, let's take a deep dive into the overall market. The top three economic drivers there in Greenville are number 1, manufacturing, number 2, healthcare, and number 3, life sciences. There aren't any Fortune 500 companies headquartered in Greenville, which I like to see. However, there is a Fortune 1000 company headquartered there. I think it used to be a Fortune 500 company. It's called ScanSource. And also there's a bunch of regional office of Fortune 500 companies. So they themselves aren't headquartered there, but they have large regional presences, including General Electric, Lockheed Martin, and 3M. So it has a relatively diverse employment center. So that's great. It doesn't have any major league sports teams, but it does have the Greenville Drive, which is a minor league baseball team affiliated with the Boston Red Sox. Always love to see sports teams of some affiliation in the city. It does have an international airport. It's the Greenville Spartanburg International Airport. And some kind of cool things about Greenville is, and it's not in Greenville itself, but it's right next door, Spartanburg, is home to BMW's manufacturing plant. And this is the only BMW manufacturing plant in North America that produces over 1,000 cars a day. So pretty cool. Now, additionally, Greenville has a population of 73,394, and that population has increased by 0.78 annually. And when I'm looking at the graph, it pretty much goes up and to the right. It looks like it's kind of stagnated since the 1960s up until more recently, maybe in 2015, where population started accelerating again. But overall, this is a good population growth. It's gaining population, which is a good thing. Now, unemployment in Greenville is 4.5%, and that's higher than the national average of 4.2%. So I don't love that. And if I can remember looking at this unemployment graph, it has kind of spiked up more recently. So I would want to keep my eyes open on that. And for some reason, it is just like super recent that it's gone from in the mid to upper 2% to 4.5%. So would kind of want to understand what's going on here if I was really considering investing in the Greenville market. Next, the average salary there is $53,695 per year, which is pretty good. That's average. Median sales price for properties are pretty high. They're $490,750. And a super surprising stat here is that they are down 18.5%, which is a ton. You didn't want to buy a year ago. And so this would lead me to maybe some cracks in the market. Maybe the market is being depressed currently. Properties, and that's probably due to interest rates being super high for a long time here, like everywhere in the US. And properties are also on the market for 55 days on average, which is up 3 days. So you have sales prices coming down, properties staying on the market a little bit longer. So this market is definitely more of a buyer's market than a seller's market. And what that means in actionable items to you is you don't have to be in a rush to buy properties here. Things are coming down. So it's good if you like this market to keep your eye on things, especially in areas that maybe a lot of properties don't come up, and you can maybe buy a bargain as the values come down. That's how I look at them. For median rent prices for Greenville, it's $1,800 according to Zillow, and the price to rent ratio is 22.6. So that is really high. And looking around Zillow, when I was looking at Greenville, I did notice that there was a bunch of relatively affordable housing in the 350 range. So I think that the median sales price is higher based upon some like super big, super expensive mansions. But overall, I didn't find that this market was super, super expensive. The 490 median sales price is kind of deceptive, to be honest with you. And so my market verdict is I don't love the market dynamics themselves here. They're not the worst I've seen. There is population growth, but there's also unemployment. Average salaries are pretty good. The sales price dynamics look like they're coming down. And so overall, I'm kind of like, on. And I'm not going to say that I totally give Greenville 2 thumbs up because it's got some stuff going on that's not the greatest. So I'm just going to leave it like that. It's one of these numbers right here. Moving on to the Google Street test. After I've selected a property that I think is going to work and I think looks good, I like to go into Google Maps and look around in the neighborhood and make sure the neighborhood feels okay. Make sure there's nothing out of the normal. Bunch of trash, bunch of people hanging out, bunch of stuff that looks like crime. Just an overall kind of blanket check of the area to go, hey, it looks okay. And when you look around in this Google Street test, you can just see there's some bigger multifamily properties. There's a bunch of apartments, but everything looks pretty good. There's nothing that stands out that says, this area looks terrible. So I give it a pass on the Google Street test. I also want to let you know why I selected this area of Greenville and why I selected this property in general. I think that's a good thing as an investor, so you kind of know where I'm coming from, that I'm not just clicking on one property and go, oh, I'm choosing that property. So the first thing that I love about this property is that it's brick. It's a brick townhome. So it should have the least maintenance out of pretty much any properties that are out there. It's not got siding. It's not got a bunch of stuff that's going to chip, paint, peel. Brick lasts about 100 years. And so I think the house is built in 1983. So this is a low maintenance property. It's also close to USC, University of South Carolina. It's close to major highways. I think it's Highway 385, if I'm not mistaken. It's close to Home Depot, to Starbucks, Chipotle, to Panera, and semi-close to the International Airport. So that is why I selected that property where it was, including the price point. And so you kind of know how I pick properties in certain markets that I've never been to before. And so moving on to the listing of this property. The property is listed for $224,000. It's a 3-bedroom, 3-bathroom townhome. It's 1,619 square feet. So not huge, but not small. I think this is a great rental size. Built in 1983. The rehab suggestions that I would recommend when I'm going through these pictures is I would add hardware in the kitchen on the kitchen cabinets. The first thing I do, make sure the cabinets don't get all oily, all greasy. They save your cabinets for a much longer period. I do it in every single one of my rental properties. Next, I put a washer and dryer in the property so the tenants wouldn't have to worry about, hey, do we have to bring it? Do you have to bring it? You're kind of just taking that off their plate. Last, I'd put shower pulls in the bathroom, expandable shower pulls. It looks like there's none there. But this property looks like it was basically renovated to rent out. It's all painted white, which I don't love, but it's in good condition, so there's no reason to spend extra money on it. And so my rehab budget in general here would be about $3,000. Super small because there's not a lot to do. The other thing that I like to look at when I'm looking at properties is days on market. This property's been on the market for 103 days. So it's been on the market for over 3 months. And that says that you can probably put a lower offer in. And if I was to offer on this property, I definitely offer lower than list. And I also like to look at views to see how popular it is. This property has 580 views, which is, it's pretty good. It's like 6 views a day on average. Not insanely popular, but pretty good. So that's how I look at that to determine, hey, am I putting in a really high offer or over list or under list? And let's say this property I thought was like worth 50,000 more compared to the properties surrounding and had only been on the market for 1 day, I'd probably come in over list. And so that's how you can use that. Now moving on to the analyzer. And if you don't have an analyzer, go down in the video description. You can download our analyzer for free, my gift to you. And this is the one that I actually use every day when I'm analyzing properties. And this is a huge thing right here. Zillow says this property can rent out for $2,200. And that seemed kind of high to me because I was like, I was looking at single family and Zillow was saying, hey, these properties can rent out for $2,100. And so something kind of goes, I'm not going to totally trust Zillow. So then I looked at some comps and it looked like new construction townhouses were running for $1,700 to $1,800. So Zillow was massively off on this one. You cannot rent this property for $2,200. I could also see in their listing description or their transaction details on Zillow that they try to rent this property in, I want to say 2019 for $1,295. So prices have definitely come up since 2019, but that's a big jump from $1,295 to $2,200. So they're off. I would say that you can probably rent this property for $1,675 would be my good guess. You're under the new construction properties, and so people looking for a deal could rent your property. Property taxes for this property are $2,620. So the property cash flows, as you can see on the analyzer, are about $1,075.17 or 5.15%. And this is the cash on cash return. And that is not phenomenal by any means, especially when high yield savings accounts, you're getting 4%. So this is if you were to purchase the property in all cash. Now, if you were to finance the property or refinance the property and get a bank loan at 7%, you're at a minus $77 cash flow or minus 1.58%. And so if you're using leverage in putting 25% down on this property, you are losing money month over month with a tenant occupying the property. And I never recommend a property that is negative cash flow. It's just not something I do. Now, there's some things that are important here that you can look at that I do like to, I don't want to manipulate's not a good word, but change as levers that you can use to say, hey, is this property going to be worth it? One of the ways you can do that is you manipulate the offer price. And so if you lower it down to $200,000, this property gets into positive cash flow territory. Not by a ton. I want to say it's like $44, but it gets into positive cash flow. So that's one lever that you can pull, lower offer price. Another lever that you can pull is you can look at interest rate. And so if you lower the bank interest rate down to 5%, you massively go up on positive cash flow to $215 a month. And if it was positive $215 a month, I'd say, hey, this is probably a good deal. You can hold this long term. It's going to work. But that means you have to buy down the interest rate. And so you need to make sure you can do that. As I do expect interest rates to come down in the future, but you never want to automatically plan for interest rates to go down to 5% because that could be 1 year, it could be 5 years, it could be 10 years. And so you don't want to be banking on that, but it's often good to manipulate that number or move that lever because we know that that's direction the interest rates are going and you're probably going to get there. And so if you do sell that property in the 3, 5, 7 year future, it's pretty reasonable to say, hey, I should be able to sell this to somebody else at a 5% interest rate. And so when you do that, the numbers work. And so I'd say, hey, if you get this one for cheaper, or if you buy down your interest rate, which you'd have to include that in your purchase price. So either lowering purchase price and using some of that money to buy down your interest rate, or just buying down your interest rate and realizing, hey, you're going to have more money in the deal, then this one will work. But if not, this property does not work at list. It's negative cash flow. But if you can get those other things, I'll give it a thumbs up. I'll say that you'll get appreciation over the long term. I'll say that you might not have a ton of equity. You're probably buying it for its value, but over the long term, this one could work. So that's my analyzing of Greenville, South Carolina. If you guys want to see how I feel about the Atlanta market, check out this video here, and I'll see you guys on another deal day. See ya.